Hello guys, this is Victor Akimande, and I want to do my screencast for my chart of account and reality check for my Gourmet Burger Food Truck. First, I want to thank each and every one of you. This class has been very exciting. That's really opened my eyes to a new lot of possibility. Thank you, our professor. Thank you for all that you have been doing for us. Okay, so when you look at the business overview, the Gourmet Burger Food Truck is a mobile quick service restaurant that provides freshly prepared gourmet burgers, fries, beverages, desserts, and catering services. Rather than operating from a permanent location, the business serves customers from a fully equipped food truck that can move to different high demand locations throughout the day. The primary objective is to provide high quality meals at competitive prices while maintaining low overhead costs through a mobile business model. This food truck provides flexibility because it allows the business to operate in locations with high customer traffic instead of depending on one permanent location. The increases customer reach while reducing fixed rental expenses. In addition to regular food sales, the business also generates income from catering services and event booking. The target market segmentation includes the office hours, which is providing lunch during office hour rush, the university students, families and local residents, tourists, festival attendees, corporate organizations, and private events. So, the chart of accounts serves as the complete financial framework of the business, and the key objectives and functionalities include identify every possible source of revenue to ensure comprehensive sales tracking, estimate all recurring monthly operating expenses across all operational buckets, determine one-time startup costs required for launch, support future budgeting and multi-year financial forecasting, assist in pricing decisions by understanding cost structures, provide realistic assumption for future pro forma financial statements, and improve overall financial planning and strategic decision making. So why is this important? A business cannot prepare accurate financial statement without first identifying where money comes from and where money will be spent. The chart of accounts provides this structure and ensure that important costs are not overlooked. This assignment goes beyond preparing a list of expenses. It provides a complete financial blueprint that will later support projected income statement, cash flow statement, and the balance sheet. And the third thing I want us to look at is the revenue generator and pricing strategies. This helps with risk mitigation strategies, designed with multiple diversified revenue streams instead of depending solely on single burger sales. Now, so from what you are seeing from my revenue generator, you see I have three major lines of generating revenue. The first one is the primary food menu, which includes the gourmet burger, chicken burgers, veggies burger, French fries, onion rings, and mozzarella sticks. While my beverages sales include soft drinks, fresh lemonade, gourmet milkshake, bottled waters, and iced coffee. Then I have the high margin and catering, which includes combo meals, family meal bundle, catering services, corporate catering, festival packages, and branded merchandise. So the pricing, validation, and marketing benchmark. Selling prices were benchmarked using official menus from established competitors, including Five Guys, BurgerFi, Chick-fil-A, Smashburger, Shake Shack, and Starbucks. Diversifying revenue sources helps reduce business risk because the company is not dependent on one product alone. During large events, catering services and festival packages can generate significantly more income than the regular daily sales. Then when you look at the ongoing monthly expenses. Recurring expenses were structured into major categories to provide a clear cost model for operating the business on a monthly basis. This is divided into 6 major categories. 1 is the food inventory, 2 is the packaging material, 3 is the business operation, 4 is the maintenance, 5 is administrative expenses, and 6 are the marketing expenses. These are all detailed out and the cost is spread out in the Excel sheet. Also, there's also need for capital requirement, which is the startup capital. This also is divided into the vehicle and kitchen equipment, the branding and hardware, tech setup, the business registration and licensing, and the working capital and initial reserves. Now, before I go to the final takeaway, then we have the reality check and financial revision. So the peer review, feedback, and revision. Now, looking at the expanded operating expenses, revised from basic ingredient costs include vehicle maintenance, commissionaries, fuels, and utility, overhead, accommodation, comprehensive accounting, then the rigorous validation process, which includes competitors benchmarking, suppliers and vendors verification, and regulatory compliance. Now, before I finally close and come to my takeaway, I would like to share my financials. This also on this spreadsheet is divided into 4 categories. The first category is the business overview. The second one is the revenue generator. The third one is the ongoing monthly expenses. And the last one is the startup expenses. So when we look at the business overview, my business overview, the name, the business type, the industry, the business description, the purpose of the chart of account, pricing methodology, cost estimation, and many other. For the revenue generator, you can see I break it down into all of the different kind of things that we are providing, the amount, the validation, and the remark. And my total revenue generation item is 2,756.26 cents. Now, when I go to the ongoing monthly expenses, this is also broken down into unit of expense. And that means revenue generator per unit, the amount, the validation, and the remark. And the total operating expenses for the month is $5,046.20. And so when you look at my startup expenses, the entire startup expenses all collated into one-time cost, the startup expense, the amount, the validation, and the remark, the total amount also that we were able to put together for this project will be total startup investment required will be $101,106. And so these prices are estimated using publicly available supplier pricing, competitor pricing, government resources, and industry benchmark, and actual prices may vary depending on supplier location and market condition. And so finally, for this presentation, my takeaway and conclusion is this. One, there is a structured foundation. From what we've been able to put together here, you can see that there's a structured foundation. The chart of account established an exhaustive financial baseline, organizing revenues, labor, operating expenses, and initial capital outlay. The second thing is the risk diversification, because there are multiple revenue channels, catering, corporate event, combo bundles, and many other. These offset reliance on daily food traffic and balance seasonal fluctuations, because definitely people are not going to be coming the same way every day. So ability to diversify will also reduce the risk, that makes it risk diversification. Then finally is the empirical validation. All financial assumptions are grounded in real industry data, verified against established quick service restaurant competitors and vendors estimate. So this is my summary of my Gourmet Burger Food Truck, and I really appreciate your input from each and every one of you. Thank you so much once again.